ठीक है, आप बोलिए जरा, शायद से
शायद आवाज आ रही है।
मैं आपको बताता हूँ
लाइव हो जाए तो
आपको आपने ज्वाइन किया होगा, आप कर ही ना चेक कर भी दीजिए, आपको आवाज आ रही है। नहीं ऑर्गेनाइजिंग नहीं, आपके पास रजिस्ट्रेशन तो आपने की हुई है ना, उसकी तो ओके, तो हमें कैसे वो होगा कि हमें भी सुन रहा है कि नहीं होगा? ठीक है, ओके, चलो ठीक है मैम, ठीक, आप एक मिनट, आप बोल देना कि can you all hear me so that we can start.
Can everyone hear me so that we can start the webinar session?
Please write down comments.
Can you kindly comment if you can hear me?
Share broadcast. Show again.
Are you? शायद से एक बार पूछना लगा
वो कनेक्ट, वो उसने डिस्कनेक्ट कर दिया था, कहते हैं कनेक्ट। यार मैसेज लिखते हैं। आपकी अपना सिस्टम इससे मैं लॉगिन कर देता हूँ ताकि हमारे पड़ा रहेगा।
उस पर ईमेल्स वगैरह कराएंगे तो ब्राउज़र डिस्टर्ब ना करे।
ये तो दे रहे हैं।
हाँ ना, तो ये तो उनके लिए ऑफ किया हुआ है, तो ये प्रेजेंट
ठीक है।
पूछेंगे से कंफर्म करें आवाज।
आपने कर दिया सर? आप स्टार्ट करें।
Assalamu alaikum everyone. Thank you very much for joining us today at the webinar session. My name is Ali Shan and I'm the Business Development Manager at ACCA Pakistan. So basically, an MOU was signed last year between ACCA and the Securities and Exchange Commission of Pakistan to support and conduct investor awareness seminars and campaigns which fall under the umbrella of Jama Punji. Now, the topic of today's webinar is Pakistan's stock exchange in the next 5 years and will be presented by Mr. Tariq Naseem, who is currently serving as the Joint Director in the Investor Education and International Relations Department at the Securities and Exchange Commission of Pakistan. I'll just give a brief introduction before I invite Mr. Tariq Naseem. Mr. Tariq Naseem is a fellow member of the Institute of Cost and Management Accountants of Pakistan and also holds a chartered Islamic finance profession degree from INCF Malaysia. He is also currently undergoing an MS in Islamic Banking and Finance from International Islamic University from Islamabad. Mr. Tariq Naseem currently has an extensive experience of over 20 years in the field of capital markets and has attended several national and international trainings, conferences, and seminars on capital markets, besides delivering lectures and presentations on different topics for audiences all across Pakistan. So I would like to invite Mr. Tariq Naseem to start the presentation.
Bismillahirrahmanirrahim. Thank you very much and welcome to the session. Hopefully in the next an hour session, we'll be discussing Pakistan Stock Exchange in the next 5 years and certain aspects of stock exchange at the moment and its opportunities and challenges plus future outlook will be discussed. And I encourage you to raise questions and discussion points so as to understand the subject matter in great detail, so that we all can benefit this session for our understanding on capital markets and future growth as well. I'd like to start my presentation with a standard disclaimer that purpose of this session is to create awareness and not to solicit investment, and therefore views presented in this session are not to be treated as views of the Securities and Exchange Commission of Pakistan. And you should know that investment in capital market is subject to risk, and you take your own decision with risk and reward for yourself, and you should prepare yourself before investing in capital market. In this session, broadly, we'll be covering 3 aspects. One, where we stand today, wherein I briefly introduce you with the market, its theoretical concept, its present state. And in the next step, I will cover the reforms we have undertaken, or capital market participants have introduced in the capital market, so as to broaden the capital market in Pakistan and enable it to play a due role in the development of the economic activity, economic growth in Pakistan. And finally, as the subject of the presentation describes, we will discuss future outlook for the next 5 years of Pakistan Stock Exchange and its some aspects relating to the future of Pakistan Stock Exchange in the next 5 years. First part is where we stand. As on today, what is Pakistan Stock Exchange and how it is contributing to the economic growth of Pakistan and financial stability of financial sector in Pakistan. So for this purpose, I have divided this section into 3 subsets. First of all, I'm going to introduce you with the capital market. Obviously, as a professional accountant, you must be aware of what is the role of capital market and how it help to capital formation in the country. But for theoretical understanding and for review purposes, we will just repeat those things for your again better understanding or to refresh your memories. Then I'll explain you the structure of capital market in Pakistan. What are the main institutions and what are their roles and how they are performing their function and contributing for the operations of capital markets or stock market in Pakistan. And finally, in the third subset, I'll briefly present to you the overall performance of Pakistan Stock Exchange during the last few years where you can see what are the potentials for future growth in Pakistan. Introduction to capital market of Pakistan. You know, capital market is typically a place where providers of fund and users of fund interact with each other, where providers provide funds to the productive users and put their money on work. And through this market, the idle money or the savings of ordinary people and institutions are directed towards the productive uses by government of Pakistan and other corporates operating in the country. And the medium used for this transfer of or channelizing of resources is securities. So theoretically speaking, we can say by definition, capital market is a market where buyers and sellers engage in trade in financial securities like bonds, stocks, etc. However, before that, somebody need to issue such securities to raise capital, and then this trading is possible. So a capital market is a market of securities where debt or equity or hybrid securities are issued by businesses that we call companies and governments to raise long-term funds. Normally, these funds are for a period of more than 1 year. And this fundraising is done through public offering process. We can further divide the capital market into two parts: primary market and secondary market. We call it primary market because primarily shares or securities are issued in the primary market to raise fund. When an IPO happened, an issuer, a public company or an offerer or a government of Pakistan offer its shares to general public, and against that offering it can receive subscription capital, and that capital can be used by the issuer or offerer for the purposes it intended for, and in return the shares are listed on the stock exchange and made available for trading. In secondary market, the trading took place. Buyers and sellers meet to trade shares, and in this way true value of shares can be recognized. You know, capital market is an important contribution to play in economic activity. I have listed few benefits of capital market or factors that highlight importance of capital market. First of all, it is a medium, a mechanism to channelize saving, as we discussed previously. The idle money can be put on work through capital market. Savings or ordinary people can be channelized from savers and towards businesses where they can put on use, they can be used in productive manners. So ordinary people can contribute small amounts, either institutional investor or small investor or big investor, no matter what their profile is, but they contribute, they pool their savings, and this pool is made available to the companies, and companies use that pooled money for their productive uses. Secondly, capital market provides multiple fundraising options to the companies. If a company wants to have partners, it can introduce equity shares. It can offer equity shares, whereby it can share its ownership of the company with the general public. However, if a company used to raise only debt and not ready to share its partnership or ownership with anybody else, it can raise capital through debt instruments. TFCs, term finance certificates, Sharia compliant securities like Sukuk can be used to raise fund using debt instruments. A company can also use hybrid mode, where some features of equity instruments are present and some features of debt instruments are present. For example, we call normally these as preference stocks. Similarly, some kind of bonds like convertible bonds can be used to raise such kind of funding uh, uh, based on the hybrid debt instruments. Similarly, from an investor perspective, there are multiple opportunities. An investor can also opt to invest in equity securities so as to be owner of that company in proportionate to its holding, or can target fixed return securities and can be an investor to the hybrid securities. So investment avenues are also broader in capital market. From a business perspective, you have multiple options to raise funds. Similarly, from an investment perspective, you have multiple options to invest through capital markets. Another important feature of capital markets around the globe is secondary market benefit. You know, when liquid and a liquid secondary market is available, both participants, that are providers or users, can be more confident that they can maneuver with their investments or fundraising options. For example, if I am an investor and today I had decided to invest in stocks of a cement company, and sometime later my analysis tell me to quit cement sector and join steel sector. So secondary market enable me and provide me with the options to switch that investment with a blink of a second. I need to just sell those securities through stock exchange electronically, and at the same time bought new securities electronically. With the proceeds of cement stock, I'll easily buy steel stocks. So secondary market enable me to switch my portfolio and even quit and offload my portfolio. I need to liquidate my investments in cement factory, I can do that. But in absence of capital market, it will be very, very difficult to liquidate investments in a cement factory. And it is time taking. I need to locate a buyer. I need to arrange for certain documentation. I need to agree on terms and conditions and blah, blah, blah. But in stock market where standardized trading patterns, trading opportunities are available, I have not required any of the steps that I was required under the unlisted or an ordinary business liquidation. So secondary market benefits me a lot as an investor, and therefore I might be ready to pay some premium in investment through capital market. And the same case goes with the issuer, because issuer is directly raising capital from the investor without involving intermediary. Like I need to raise fund when I go to the bank normally charge me 8 to 10%. And you know what the bank is paying to depositor, the actual fund provider. The actual fund provider normally usually get around 3 to 4%, 5% max. And the borrower of the bank is required to pay 10 to 12%. And in this way, you know that the banking spread is a huge intermediation cost, which neither benefit the depositor nor the borrower. The providers and users of fund both are ended in a transaction where borrower is paying a higher rate, whereas a depositor is getting a lower return. What if there is no intermediary or direct dealing between the fundraiser and fund provider? Obviously, this intermediation cost will go down. And I would not say that it will be reduced to zero or somewhat, but in capital market, this intermediation cost will be reduced to the certain extent where a win-win situation for both the investors and the fundraiser. I can say the rate will be around 8% or 7% up between like that, based on the individual securities. So capital market, secondary market enable providers and users a fund to do business or economic activity in most efficient and productive way. Depositors, investors can earn more, and fundraisers, companies can have access to cheaper capital. Finally, the last point which you can see on this slide is bank-based and market-based. I am referring to bank-based economy and market-based economy. Pakistan is primarily a bank-based economy. What I mean is, for financial needs, we are dependent on banks. Most of the financial needs in Pakistan are being met through banking institutions. As I explained earlier, the issue with banking sector is it involves huge intermediation cost. And other than that, depositors have less choice and interference in where their money is to be lent. Whereas in capital market, as an investor, it is your option to invest in any particular area. For example, I choose not to invest in, again, for example, cement sector. But as a bank depositor, I have no option or recourse to advise my bank to not lend my money to banking cement industry. But if I am providing funds through capital market, it is my option not to invest in cement stocks. In market-based economy like USA, Japan, etc., the businesses are able to generate funds or raise funds directly through the fund providers. Instead of going to intermediary like bank, they directly approach investors and raise capital. And in this way, not only they have cheaper financial resources at disposal, but they are able to attract a group of people that can interfere, that can support, that can vote, that can propose changes in the business model of that company as well. For example, if I am a company and I use market to raise capital, and one of my investor is an institution, a financial institution, say for example, a global institution, as a shareholder, it can help me as a company to run my business. At annual general meeting, it can criticize my policy, it can suggest new policy. As a reviewer of my financial statements, it can guide me or provide me with the valuable suggestions how to manage my finances, and so on and so forth. Therefore, market-based economies are more efficient. Secondly, we know for a small and medium enterprises or a green field project, it is hard to raise funds through banking institutions because banks are holding money of risk-averse people. They will not be providing funds to a risky business because of their inherent limitation, because they have a fiduciary responsibility to protect the funds of depositors, and depositors are those people that are risk averse. Therefore, they put their money in the banking. Otherwise, they are putting their money somewhere else. So when they are not putting in the money in the risky businesses, bankers will also not be going to invest in or lend to risky businesses. And through this way, the new ideas, the new businesses cannot flourish. In contrast, in capital markets, there are institutions that finance greenfield projects, new ideas. We call such institutions venture companies, private funds, etc. These are specialized institutions where they pool their money to invest in risky project. And why they are investing? Because they know risk and reward are positively correlated. Higher the risk, higher the reward. They divide their portfolio in such a way that a portion of their portfolio is invested in risky ventures so as to get excessive or extraordinary returns. So capital market can support new businesses, new ideas, greenfield projects more efficiently as compared to banking institutions. Therefore, you can say that a market-based economy is more useful for development of any economy as compared to bank-based economy because it has its own limitation. So in Pakistan, from a number of years, we are trying to develop a capital market to enable it to meet financial needs of providers and users of funds in most efficient manner. The next slide. Who are the participants of capital market? I've broadly categorized these participants based on our earlier discussion into three segments. Issuers, those are the users of funds. We talked about it, companies and governments and substantial shareholders that can also be an issuer or offerer and sell their securities. For example, Government of Pakistan was substantial shareholder in OGDC and like entities like that, and it's sell its holding in that company and get that company listed on stock exchange. Then become service providers, the exchange, clearing company, depository company, intermediaries like brokers, support services providers like credit rating companies, accountants, auditors, etc., etc. These are the services for providers that enable providers and users of fund to achieve their objective. And finally, the investors, the most important segment in capital market. Investors can be individual like you and me, or institutions. Institutions particularly, I want to highlight that as a student of ACCA or accountancy profession, if you're going to invest in capital market, the preferred mode I would recommend you is to invest through an institution, because at this moment in time, in my view, it will be hard for you to directly take risk of investing in capital market. You might not be able to comprehend the financials of that company without proper qualification and experience. You might not be able to understand the legal challenges that an entity is being faced, or global challenges that are impacting that entities in a particular way. Therefore, if you choose to invest in capital market through an institution, and that institution I mean through a specialized institution established for investing in capital market on behalf of individual investors, and we call it mutual funds. Mutual funds are specialized vehicles or institutions managed by professionals to invest in different avenues, and through mutual funds you can invest in capital markets at initial stages. And at a particular level, when you feel that you are confident enough, qualified enough to directly take the risk and directly make your own portfolio, you can also directly invest in capital market. This slide is about public offering. As an issuer or a business, what you can get benefit from capital market. If you are a business owner or working for a company, what options are available to you? As an accountant, we normally involve in financial matters of companies, and often we face situations where we work on proposals to raise funds for our businesses, either as an owner or as an employee of that company. So in capital market, you can use two modes. One is initial public offering. You can issue further capital to general public, share your ownership with the general public and raise funds, or you can sell your existing shareholding to the general public. For selling of existing shareholder, we call it offer for sale of shares. For fresh issue, we call it initial public offering. So in both way, when a company is issuing shares, means capital will be raised by the company, whereas when shares are offered by the substantial shareholder like Government of Pakistan did in OGDC, it means owners of the company are liquidating their investments and getting benefit of what they have made from the company. Minimum capital requirement is rupees 200 million. With a paid up capital of rupees 200 million, any company can list on stock exchange. And for that purpose, they need two things: approval of prospectus from the Securities and Exchange Commission of Pakistan and approval of the listing from stock exchange. This is normally a 4 to 6 month time taking process, whereby you can make a proposal, you can complete the documentation requirement, you can go for approval processes, and you can go to the public and actually get funds from the public. Similarly, I told you there are options to raise funds through debt securities, and we have two type of debt securities that through which through you can raise funds. One debt security you can issue directly to the general public, and for that matter you need to offer issue a prospectus and approve sorts of approvals. However, if you choose to issue your securities to some select institutions or individuals, you can also do that, and we call it private placement. And in private placement, you don't need to seek approval of stock exchange or the commission. You normally prepared offering document that we call it information memorandum, and based on that you approach individual or institutions and privately place your debt securities, and subsequently get them listed on the stock exchange on a special counter made for these type of securities, where secondary trading can happen to provide exit to the securities holder. A little information on the service provider. As a professional accountant, this is an important area for our career growth as well. We can provide a number of services in these institutions. But I have not mentioned the regulator, the SCCP, where a large number of ACCA qualified and other accountants are also working. In addition to the regulator, there are financial market infrastructure institutions like stock exchange, commodity exchange, clearing house, central depository company, where a large number of professionals are also working and providing professional services. And these institutions are there to provide specialized services in capital market. Intermediaries like securities broker, we can also act as a security broker, or we can work for a security broker as well. We can act as a security advisor, a future advisor, and we can act as a securities manager, managing portfolio of other people. As a professional, we can start these business ventures by getting licenses from the Securities and Exchange Commission of Pakistan under the respective regulations. So it is an opportunity for professionals to start career of their own and start businesses. And even they can work for others to perform similar functions. And these intermediaries perform an important role in capital market by linking up or facilitating participants of the capital market. And the third layer is service support provider. A number of professionals are also working in capital market to provide support services. For example, audit firms that are providing with the auditing services. We have credit rating agencies that provide credit ratings for the institutions and entities and the instruments. We have professionals that called lead arrangers, providers that help the companies to raise funds through multiple instruments. We have book runner that provide services while running books under the book building method to raise capital. And we have ballotters, transfer agents, and underwriters, and so many other professionals. So you see a number of professionals are working as a support services provider in capital market, and you can also take benefit of these opportunities as well. I will just this slide is actually repeating what we have discussed, but I'll quickly wrap this, that as an investor we have two options: direct investments, indirect investment. Well, when we are investing directly, we normally aim for dividend income, we aim for capital gains, we aim for fixed returns through debt securities, and sometimes we aim for speculative gains, and we use derivatives product to make quick gains without actually employing the entire capital, and just based on the certain portion of margins we can earn more. So as an investor, we have different strategies to invest in capital market. Indirect investment, as I told you, you can invest through specialized institutions called mutual funds, and you can use equity, debt, money market funds, or hybrid funds to invest or distribute your portfolio as per your risk and your target returns. The structure of capital markets. In this diagram, you'll see the entire structure, the biggest structure of capital market or stock market in Pakistan. Obviously, it is being headed by CCP as a regulator on the top, and then PSX, Pakistan Stock Exchange, CDC, and CCPL, PAMAX. These are the frontline regulators and capital market financial infrastructure institutions. And then second layer is intermediaries that include securities future brokers, CDC participants, clearing members that include local clearing member, non-local clearing member, custodian clearing member, and commodity futures brokers. So this is the overall capital market structure in our market. I'll briefly explain these in later slide as well. Therefore, I quickly going through these slides. Pakistan Stock Exchange was formulated or came into being in 2016 after mergers of 3 stock exchanges. National Clearing Companies, Pakistan is there since 2001 and providing clearing services. Central Depository Company 1997. Providing the custody services, and Pakistan Mercantile Exchange is a licensed futures exchange based on commodities in Pakistan. So, what these institutions primarily do, technically speaking or theoretically speaking? Pakistan Stock Exchange is a stock exchange. It primarily performs 2 functions: listing and trading. In first stage, in the primary market, it provides a platform for public offering whereby shares can be issued to general public to raise funds. And this process from Pakistan Stock Exchange perspective called listing. And the security markets can do trading, obviously trading of securities at stock exchanges. And CCPL is a clearing house. Each and every trade that is traded at a stock exchange is to be settled by a National Clearing Company of Pakistan. It performs clearing and settlement function. CDC, a custodian of securities, electronic securities, provide services for custody of electronic securities in electronic lockers called sub-accounts at CDC. And it also enables movement of securities through transfer of securities from one account to another, pledging of securities from one account to in favor of another account. So these institutions primarily perform these functions. Now in the coming slides, I'll go quickly and just tell you the overall numbers and performance. This is just for your understanding and to see the size and status of our capital market. So in this slide, you can see a number. So sorry, I was on this slide. These are the numbers of market participants. See, Pakistan Stock Exchange is a self-listed company. In company structure, it was incorporated in 2016. Previously, it was a company limited by guarantee, but now it is a company limited by shares. Like any other company, it has board of directors, but its operational structure is a bit different from other companies. It has a regulatory functions and it has a commercial functions. As a company, it needs to produce profit for its shareholder, so it has a commercial affairs division. But as a frontline regulator, it performs regulations of market intermediaries and institutions. So it has a dedicated independent regulatory affairs division headed by Chief Regulatory Officer. And of course, the other functions include company secretariat and internal audit to perform other functions as well. Interestingly, you can notice its governance includes 50% independent directors. It has 50% independent directors, 20% strategic investors representative, 20% broker representative, and 10% general public. So it has now a broad-based shareholding. They're still in a myth in the market that stock market or stock exchange is owned and controlled by brokers. And you can clearly see from the governance structure and ownership structure, this is not the case now. It might be in the past, but now stock exchange is not owned or managed by brokers. Of course, they have say to some extent. They have 20% shares. They have their representative director sitting on the board of Pakistan Stock Exchange, but they are not major shareholders. Majority directors and majority shareholders are non-brokers at the moment. So we can say that institutionally or operationally, now Pakistan Stock Exchange is independent from brokers. Market segments, again, I'll quickly go through these slides. Pakistan Stock Exchange has 4 segments for trading. That is equity, derivatives, bond, and SMEs. Equities is there for trading of ordinary shares. Bonds are there to trade bonds, TFCs, Sukuk certificate, etc. SMEs for small and medium enterprises where their securities can be listed and traded. And derivatives, you know, these include futures contract and options contract as well. Trading platform. For these segments, Pakistan Stock Exchange has 4 trading platforms. Karachi Automated Trading System, CATS, for trading in securities and bonds. BATS for bonds. Futures market is for futures instruments, and OTC market is also there. OTC means negotiated trade market, where deals, private deals, can be registered or reported and made legal transactions. How a transaction took place at stock exchange. So first of all, you know, stock market works on a mechanism called T+2, Udhar ki market. Trade today and settle 2 days after that. So we need a risk management system to ensure that every trade that is being entered or executed at stock exchange is settled in a timely manner. So there is a risk management system to ensure that eligible person with appropriate margins and collaterals can execute a trade at stock exchange. Then trading engine, when risk management platform or system enable clear a participant, it can access to trading engine where buyers and sellers meet. And when a trade is executed, the reporting engine inform both the buyers and sellers that trade has took place. And a role of stock exchange in that trade is concluded at this stage, and trading data is transmitted to National Clearing Company of Pakistan for clearing and settlement purposes. Quickly, the performance of Pakistan. These are the numbers that are generally available in annual reports of stock exchange and the economic survey of Pakistan and SECP annual report. But quickly, two important point I want to make here in this slide. You can see the number of companies is declining. We have very small number of listed companies, 558 at the end of June 2018, with a listed capital of 1.2 trillion rupees. But the important note here is to make is that this listed capital has become a market value of 8.6 trillion as market capitalization. So you can say that every 1 rupee raised to capital market now has a value of almost 8 point something. So 8 times growth has attained by businesses by listing their capital on stock market. This is again a chart, graphical representation of number of listed companies and capital raise. And again, you can see number of listed companies is declining, but their capital is increasing. And this is because SECP initiated a campaign whereby many of the defunct companies that are of very small size was delisted and removed from the stock exchange. But new companies that are listed are of huge sizes. Therefore, size in terms of market capitalization or listed capital has enhanced, whereas number of listed companies are declined. This is again a chart, a bit outdated, but just to give you an idea what capital market offer to investors. It is average for calendar year 2006 to 15. But idea is just to give you an overview how the different asset classes are performing, are giving returns to their investors. You can see bank deposit returns of 5%, T-bills 10%, the defense savings certificates 11%, but Pakistan Stock Exchange was top on with 20%. And you can notice that 2006 to 15 period include 2008 market crisis as well, where stock market witnessed a negative return of more than 80%. So this is an average 20% plus return, which investors are able to generate from capital market despite markets ups and downs. So a hefty return, of course, with reasonable risk as well, because the return is also always being correlated with the risk as well. But for an investor that can make a portfolio of risky and safe investments, capital market is a good place to earn a reasonable profit as well. This chart shows performance of stock market index, 100 benchmark index, 100 index during a certain period of times. Now quickly the recent market trends. As you can see from this slide, one of the major achievement of Pakistan's capital market or SCCP and its participant is securing the global standards at higher rate. You know, international standards are being set by international standard. IASCO, the international body for global securities regulator throughout the globe, we were standing at 37% in 2002 in terms of compliance to global standards. That was raised to 62% in 2015. And within a period of 3 years or 2.5 years, we are able to improve this rating by to the level of 83%. In March 2018, IASCO published its Pakistan's follow-up report and classified us as an market where 83% global standards are being implemented. So it is a huge achievement. And with these global standards in place, we expect market to grow at a higher rate because it gives confidence to international investors, local investors, institutional investors as well, and businesses to take the route of capital market to raise funds. Secondly, our market performed very well during the 2017 years, touching the high of 50,000 plus index. And many still believe that it has again potential to achieve that target in whenever there's political uncertainty is totally removed and new policies are in place. And this depicts and growth potential of capital markets in terms of investors getting their returns from this market as well. We again recognized by a global standard setter called Morgan Stanley Composite Index. Morgan Stanley has this index for a classification of different markets, and we were on the frontier markets classification from 2008 onward. But in 2017, MSCI reclassified us as an emerging market, and now Pakistan is among the emerging market where a large pool of investors, international investors, can tap this market as well now to pool their investment or make their investments in Pakistani capital market as an emerging market. After 2017, we have witnessed a market decline as well, and there are many reasons we can discuss about the causes and underlying reasons for this default. Briefly, we can say it was caused by political uncertainty, expected devaluation, foreign investors net inflow, and selling pressure due to profit taking at higher levels. And this pressure impacted the market. Market witnessed a lowest point of the year to 38,000. But you know, first time in the history, the large sellings of foreign investors was absorbed or taken by the local institutional investors. That includes banks, insurance companies, and mutual funds. And despite a decline of 14,000 points in the index, we have not witnessed any crisis in the market, and market is performing as usual. So second part of this presentation is about the reforms and challenges. I had divided this part into regulatory reforms that we have introduced in recent past, the structural reforms and reforms for investor protection, and then finally I will talk about a few key challenges that we are exposed to and we are still facing, and we are trying to overcome these challenges as well. For regulatory reforms, as a professional, you might have knowledge of these new legislation that were introduced during the last 2 to 3 years. We have revamped Companies Ordinance 1984. We have replaced Securities and Exchange Ordinance 1969 with the new law called Securities Act 2015. We have introduced a new law for derivatives and futures market in Pakistan called Futures Market Act 2016. And we have also introduced a new type of legal entity being registered in Pakistan that is called Limited Liability Partnership Act. And under the Limited Liability Partnership Act, professional firms that's like accountant firms, lawyer firms, doctors firms can be registered while enjoying the tax benefit of individuals or association of persons. They can also enjoy the benefit of perpetual life like a company. So you can incorporate a limited liability partnership fund. It will be taxed as an association of persons, whereas it will be having a life of like any ordinary company, perpetual life, which will not end with the death of any of the partner, and you don't need to constitute a new partnership firm upon death of any of the partners. We have entirely revamped regulatory frameworks under these legislation. You can see a number of new regulations were introduced in 2016, 17, and 2018 that revamped licensing and regulatory framework for entire capital market. We have around 20 plus regulations for capital market institutions. We have introduced the concepts of regulated persons and licensed persons through these law. On corporate sector, corporate governance, and we have transformed or translated that code of corporate governance into regulations issued by the Securities and Exchange Commission of Pakistan. Previously, this code was used to be part of PSX listing regulations, but now it is a statutory regulations issued by the Securities and Exchange Commission of Pakistan. We have brought matters relating to Islamic finance under the ambit of Companies Act as well, whereby Sharia compliant securities criteria is being determined by the SCCP to give confidence to all the stakeholders. We have introduced framework for listing of Sharia advisors as well, and we have brought certain amendments to NBFC regime as well, whereby the practical difficulties were removed and new avenues were provided for growth and development. Structural reforms, as we briefly discussed in the first part of presentation as well, we have corporatized, demutualized, and integrated stock exchanges in Pakistan, formed one national stock exchange, and with self-listing and divestment of security, 40% stakes were offered to the strategic investors representing 3 exchanges from the China. Board of governors of these entities have also been reconstituted, introducing the concept of independent director. Now, Pakistan Stock Exchange has 50% independent director, whereas NCCPL and CDC has 1/3 independent directors. NCCPL, the clearinghouse of company, has attained the status of central counterparty. Now it is guaranteeing each and every trade settled at the stock exchange counters, and by for doing that, they have now dedicated settlement guarantee fund to support them to settle each and every trade executed at stock exchange. For investor protection, we have introduced a number of reforms because we feel that this was an area where we need the most. So we have formulated regulatory framework for introduction of customer compensation fund. We have consolidated all the 3 investor protection fund being established by the earlier stock exchanges, and now this fund is there to compensate investors' claim in case of default of brokers in stock market. And now this fund is of a substantial size, and we expect that the investors' complaint can be, investor claims can be settled with more amounts available for their
How much
disposal.
compensation will be provided to investor in case of default of broker?
Actually, there are per default limits, and 25 million rupees can be provided, and certain times it can go up to 75 million rupees. But exact amount you can find in the Investor Protection Fund regulations of stock exchanges, where exact amount per default is mentioned, and the process of getting that default is
But
also
when
provided.
our securities are held by CDC instead of broker, then even then default will occur by brokers.
I think at the end of presentation we'll discuss this area. Actually, some of your questions may be answered in the later part of this presentation as well. So another risk area, as you can notice in this question as well, that protection of assets of client, and when assets are placed with the brokers, how can we protect? So we have introduced two new products called direct settlement services and national custodial services. These services are being provided by the central depository company and clearing company. And under these services, you don't need to park or deposit your funds and securities with the broker. You can deposit your funds and securities with directly with the central depository company and national clearing company of Pakistan, and still you can trade through brokers. A mechanism was put in place whereby trading is being performed by the brokers, whereas custody of your asset is with not brokers but central depository company and NCCPL. We have also introduced asset under custody limits for brokers. Now, a broker can hold a particular amount of securities based on its capital and available resources. So now it is linked with its capital. The more capacity it has, the more securities it can hold. But lesser the capacity it has, it has to reduce its asset under custody or total portfolio to that extent, proportionate to its capital. And we also ensure through a segregation mechanism that each and every security of a client is properly segregated and protected. For this purpose, the options of movement of client securities or misuse of client उसको पकड़ लेते हैं तो फिर इशू नहीं होगा। मोस्ट ऑफ द टाइम जो है ना लोग,
और वीडियो भी आ रही है, लाइव आ रहा है, ठीक है, चलो थैंक यू।
so welcome back participants. Sorry for the inconvenience caused by this technological issue. We were talking about the reforms for investor protection and facilitation. Another tool that are extensively being used, or we still plan to use extensively, is again technology. With technologies, you can create awareness, you can make people aware, and you can protect their rights as well. So CDC, through CDC, e-access services has been introduced that includes IVR, interactive voice response system, emails, online alerts, and SMS that enable subscriber to get real-time information of securities from their respective sub-accounts. Previously, it was optional, but we have noticed that a large number of persons are not using these free services to get them aware in timely manner. So now we have made it mandatory for each and every account holder. It is now mandatory to provide a valid mobile number to get SMS and an email ID in case of institutional investors. So now an investor is bound to get information of movement of his securities, its securities, her securities from its account. So now an investor may not face a situation where securities are moved from his accounts without his knowledge. So similarly, we have introduced some other electronic modes as well, including eIPO to facilitate. Now you don't need to go to bank to file a subscription application for an IPO. You can just register to e-services iPortal of Central Depository Company in Pakistan, and if your bank, almost 8 banks are there, you can directly subscribe securities through using internet eIPO system, and you don't need to even fill a form. So directly you can apply. Bank will transmit your subscription money. In case of success, your shares will automatically credited in your Demat book entry account, and your in case of failure of IPO or unsuccessful result, your money will be automatically transferred back to your bank account. So eIPO system. Similarly, if you are a shareholder and want to vote an AGM and don't want to be physically present at that general meeting, you can also register through e-voting mechanism to vote your in annual general meeting of any listed company. We have also introduced last year e-dividend regulations, whereby now it is mandatory for each and every account holder to provide valid IBAN detail of their bank accounts holder, enabling direct credit of dividends into bank account. Now you will not see a dividend warrant coming into your house or office with an amount written on that, and you are going to deposit that dividend warrant into your bank, and it will take another week to clear, and so on and so forth. So now whenever a company will disburse dividend, the banker will electronically credit your proceeds directly to your bank account. And through this way, the payment timing has also been substantially reduced from over 50 to 60 days in total. Now you can get your dividend in 10 to 15 days. So similarly, we have also introduced introduced back in 2011 our e-services through you can incorporate companies and file your statutory return. Under the e-services system, now you can incorporate a company in Pakistan in 4 hours. In 4 hours time, you can incorporate a company anywhere in Pakistan. And we have dedicated 8 to 9 locations. We have dedicated offices as well to assist you. But incorporation of a company is now easy. And additionally, we have also collaborated with FBR also. And if you are going to incorporate a company through our system, you will also be able to get tax registration with the same system. So not only you will get company registration certificate, but also an NTN certificate for your company as well. So this technological solution has provided with the entrepreneurs an opportunity to quickly incorporate companies, and result is already there that we are registering more than 1,000 companies in a month.
NTN will be generated within 4 hours.
Company will be incorporated in 4 hours, and NTN will be generated based on this information. You don't need to
Submit
any additional information to FBR. This system is linked up, hooked up with the FBR system, and you'll get tax registration.
FBR will issue us an NTN certificate.
NTN certificate for company incorporated through our system. Yes. Similarly, to disclose material price sensitive information.
Whether NTN or a sales tax registration number will also be issued.
No, only NTN. For companies to enable a timely disclosure of material information, Pakistan Stock Exchange has implemented a system called PUCAR, Pakistan Unified Corporate Action Reporting System, that enable company to disclose in a transparent way material price sensitive information to the market and its participants. A listed company, for example, again OGDC, can transmit through this system an information, price sensitive information, and that information will be in a timely manner will be distributed or disseminated to all the participants through this system through PSX website and other alerts based systems. We have a web-based online investor complaint management system both at SCCP level and PSX level, and we have initiated a comprehensive education and awareness program called Jama Punji, under which we are conducting several sessions throughout Pakistan with more than 36 universities and other institutions, educating and creating awareness among the masses regarding the capital markets in Pakistan and the issues and challenges we are facing and their rights and obligations, so as to make them aware that don't be a victim of double shy and don't be made fooled by some persons in the name of capital market instruments or institutions. So this initiative of Jama Punji, you can find details on jamapunji.pk or Jama Punji Facebook page, and you will find a number of useful information on daily basis, including videos, tutorials, guidebooks, movies, even I think characters are there to guide you on certain things. Competitions are there, risk meters are there, scam meters are there. A number of things you will find on the Jama Punji portal that will help you to get more information on financial matters being regulated or governed by SCCP. Now to certain challenges that we are facing. And I think as a professional, these are these challenges are not new for you. Again, we have some problems with the presentation itself. But you know, the challenges, first challenge we can talk about is undocumented economy. Our major substantial portion of economy is undocumented, and since it is undocumented, it use informal financial channels to meet their financial needs. It can go to double shah for investments, for example. It can go to a margin at high extra rates to borrow. It can go illegal, fraudulent mudaraba company. So when you are in informal channel and you are using those channels to satisfy your financial needs, you have no protection. You have no protection. You have no legal protection available for your investments. In case of any fraud, you need to file obviously a fraud suit in the civil court, and long proceedings you will able to get some justice. But if you invest or use formal channels, there are regulators, there are rules, there are regulations that are there to help you in case where difficult situation has arisen. Secondly,
sir, you mentioned earlier that since you in background, return of around 20% have been attained between 2006 and 16. If you link it with the macroeconomic situation of the country, this seems to be a very good return. So, what is exactly in the subsequent year after 2016 to June 2018? Number one, and number two, is this return reflective of specific to the stock market confidence or the results of specific companies? Because macroeconomically we are not good, but the main weightage in stock market, for example, OGTCF, they are stuck with circular debt. So things don't seem to be correlating to each other.
For the period 2016 onward, I don't have a comparative data. But as far as capital market is concerned, let me tell you, in 2016, the index was around 30,000, and if you compare with today, even it is substantially have enhanced. But within that period, we have touched a peak of 52,000 as well, and I have discussed few areas, few challenges that I think are was the cause for that decline from 52,000 to below 40,000. Overall, the economic conditions in Pakistan. Overall, economic condition of Pakistan and corporate sectors have substantially increased, and that is really reflected by the stock exchange. The return we are talking about is KSE 100 index return. The 100 top companies included in the return. However, if you link your question with this slide, you are right. 558 companies listed and 100 companies included in index are not representative of entire economy. Of course, majority of our businesses are undocumented, and this is a key challenge we are facing. So, but when we say in regulated corporate sector, it is true, because these listed 568 companies are contributing 70%, more than 70% of direct income tax. And other than these companies, nobody is paying tax in businesses. So we can say that these listed companies are representative of our documented economy, and our documented economy is growing at a reasonable and good speed. Another key challenge that we'll discuss is the low saving rate. Of course, savings are very important for investment as well and growth as well. Unfortunately, even professionals misunderstood the concept of saving. And if I ask a normal person, he'll say whatever is left after spending is by saving. Actually, this is a wrong concept. Saving means setting aside a portion of your income or revenue, setting aside a percentage of your income or revenue, not saving, not after what is left after spending. So, for example, if you have a revenue of 100,000 per month, for saving purposes, you need to set aside a certain percentage every month. This is saving. As a student, even if I get a pocket money of ₹1,000, I think as a professional student, it will be good if I can save 10% of that amount. If I save, then I can only invest. So as a young professional accountants, we need to save and subsequently to invest to grow our financial resources for future. Another problem that we have discussed is few hundred listed companies. Similarly, we have very small number of investors. We have small number of investors as well in a market. This to make our market less liquid, less vibrant, because when there are small shares, small number of investors, small number of players, there is not a true price discovery of shares. The more liquid market is, the more true price discovery is there. So it leads like problems like low volume, difficulty in fundraising. Sometimes you don't find buyers, and similarly, when there is a market is illiquid, the investor confidence is also not there. The next 4 areas that I have listed as the key challenges includes lack of viable investment alternatives. For example, in Pakistan, when surveys were done by State Bank of Pakistan, it transpired that most of our population wants Sharia compliant sources of investment and financing. Unfortunately, capital market are predominantly based on conventional principles. All the instruments and procedures are normally tilted towards the conventional and not Sharia compliant options. So this was a challenge, and we are very aggressively working on this. We have a dedicated Sharia board at SECP level, as well as the market intermediaries, that stock exchange, etc. also consult regularly Sharia advisors to bring more products that are Sharia compliant.
Except no index for Sharia compliant companies.
Index always index also the trading method, the funding method. For example, last month our Sharia advisory board have approved a product called share Muraba financing that that is an alternate for conventional margin financing product. Previously, we don't have an alternate option for that. If you want to borrow to purchase an asset, there was no mechanism available in capital market to borrow on Sharia compliant basis. But now there has been introduced an option that will be available in market within a few months practically. But this alternate will enable those investors that want to invest in Pakistan capital market based on Sharia principles. So there needs to develop more alternate models. Similarly, our derivatives markets are small. We need to develop that market as well and provide investors with more options to invest in capital market. Another problem was limited outreach. The fintech, the financial technological solutions are enabling us to attain a good pace in this regard, as we are making available throughout Pakistan electronic systems. But we still believe that in Pakistan, given the financial literacy rate and access to internet and other services, our market outreach is still limited to certain cities of Pakistan, and masses have yet to be provided with an access to financial services in Pakistan. Another important and very relevant challenge to us is public confidence. There were frauds, there are stigmas attached to the capital market participants, etc. That is still haunting us and all market participants. Even though we have improved a lot in terms of regulation and systems, but the stigma, the public that have lost their confidence in capital market needs to be convinced again and assured that their investments are protected, duly protected and guided. General public is guided at large how to protect their investment by themselves as well. This is another key area that we think that is a bigger challenge for us as a regulator to handle. And finally, lack of awareness. When we have done some surveys, it concluded that overwhelming majority of general public is not aware what capital market is and how can it help to meet their financial needs. And therefore, this Jama Punji initiative, this ACCA, SECP memorandum of understanding, and these sessions have been scheduled to create necessary information awareness among the masses, including of course professionals that can also replicate this information to their domains as well. So this lack of awareness is a key challenge that still we are facing. In the last part of this presentation, I'll be quickly going through the future plans, outlook, where I can see as a professional the Pakistan Stock Exchange next 5 years. And of course, this is just based on my experience and assumptions. You can have your own and look into the future of Pakistan Stock Exchange where you personally think that PSX will be in the next 5 years. I, as a regulator, categorize this part into 4 subsects. First set is product development. Okay. Sorry. First set is product development. I think the more products are needed to develop our market. And for this matter, few target areas that PSX is currently pursuing, I have listed few of those areas. Then, of course, investor protection is an ongoing and going to exercise. We still need to work on investor protection areas so as to build confidence of stakeholders in market, and also to enhance outreach throughout the message throughout the Pakistan. Our primary capital market also need to be expanded, particularly for small and medium enterprises and agriculture company to raise to come and get access to finance through capital markets. And finally, we lack a vibrant debt market as well, particularly from sovereign debt perspective. Sovereign debt is not based on listed instruments, and our target is to get the sovereign debt floated through capital markets so as to provide government with the cheaper source of funding, as well as the investors to invest in instruments that are safe and that provide a good fixed rate of return or floating rate of return as well. So for product development, Pakistan Stock Exchange is working on to introduce exchange traded funds. Exchange traded funds is the kind of product that pool certain securities in a basket. If you want to invest in a certain basket and don't want to go for each and individual stock, for example, you want to invest in oil sector, but presently you have an option to go for individual stocks. You will need to go to purchase OGDC, Pakistan Stock, Pakistan State Oil, Atak Petroleum, etc., etc. Different stocks you need to invest in. But if an petroleum sector ETF is there, and ETF exchange traded fund have a underlying basket of different stocks in different proportions, and if you acquire one unit of ETF, you will be indirectly investing in multiple stocks. So in this way, you can invest in basket of securities through one product. So we are trying to introduce this ETF that will help particularly individual as well as institutional investors to build their portfolios. We are trying to make the trading process most transparent and efficient as well. So we are considering to widen the circuit breakers. Currently, you know, the price, whenever price of a stock go up to 5% up in either direction, it will stop trading. But our new concept of market halts is being considered to be introduced in future at stock exchanges, enabling different levels of halting trading, enabling investors to provide with more opportunities to trade even within certain boundaries, while of course ensuring price stability. The trading system and surveillance system at stock exchange is also going to be replaced in coming years, so as to provide users with more suitable ways and means to access to trading system. Finally, the more important product is introduction of derivatives market. We need to introduce derivative market in enabling investors to hedge their risk and to take benefit from speculative investments as well. Currently, we have cash settled futures and deliverable futures market only. We don't have option market available, but we think that in future derivatives, particularly if possible, Sharia compliant commodity futures contract will enable investors to effectively hedge their risk while investing in capital market and other portfolios. For investor protection and outreach, we are strengthening our regulatory framework and capacity for enforcement measures. We have already set up a joint investigation team comprising officers from Pakistan Stock Exchange, CDC, and CCPL. They jointly do enforcement and do inspections of market securities broker operating in Pakistan. We need also to strengthen customer compensation fund so as to make more resources available for compensation in case of default. Currently, there are limited resources. Sometimes we are able to compensate claims in little proportions, and sometimes we are able to compensate more. But we think that this need to be further strengthened in futures. Another area there where we are working is to introduce a product whereby clients or investors feel that their investments, their securities, their cash is more secure. Like direct settlement model where securities can be parked with CDC or NCCPL, we are working on a new model that will be introduced into in the market in the coming years, where there will be brokers having no custody of client assets, brokers with only trading rights, broker with that are only broking. In this way, we can introduce a new breed of brokers that can help us to expand market outreach at the one end, and at the same time does not create more risk for us because they will be not holding client assets. They will be less risky as compared to today's broker regime. So this is another area where we are continuously working, and we expect in the coming days, in the coming years, there will be practical model that enable such kind of brokers, and where investors don't need to park or deposit their securities and cash with brokers, and still their brokers are able to generate business of broking.
Approximately, sir, how long it will take that direct payment system?
I think it really take at least a year or two to devise a model that is workable. We don't want brokers to be out of market as well, because they are very important part. Stakeholder. They provide platforms and they bring investors in capital market. So I think we have attempted in the past to bring such solutions, and we still are working. Unfortunately, the previous attempt didn't work, but we develop a concept paper and we introduce certain regulations as well, but unfortunately that didn't work. So we need to try again and again to bring a solution, and it will take a year or two or maybe more to provide a solution whereby this win-win situation can be attained.
Is there any possibility to avoid dependency of investors, dependency of brokers, so that we can directly make investment on stock exchange and sale or purchase directly?
You always need an intermediary to trade at a stock exchange. Through the globe, you will find more models where without intermediation, you can directly meet your, you can directly trade. Intermediaries will always be there, but what is happening throughout the globe is with technological solution, you don't physically need to interact with the system will enable you to directly send your trade order on the trading system. So when such system is available with you, you don't need to replace brokers, because brokers are there to provide you with those systems. Brokers are there to provide you with those systems, and where you need some other services as well. For example, you need research reports, you need advisory, you need management portfolio services. So broker will be there to provide such services where you need.
The same facility which is being provided to brokers, is it possible to that facility can be provided?
Because the services provided, the intermediaries are properly regulated. We will not be able to regulate millions of investors. In case of short selling, to who to pursue? So to pursue an individual will be an impossible task for us. Currently, we can pursue brokers because we made them responsible. If we authorize them to trade on behalf of others, we made them responsible for their trades as well. And we asked them to control their trading patterns and to ensure compliance with the regulatory framework as well. Again, the investor protection and outreach, particularly global linkages. Now we have strategic investors from China. We can expect to link our market with Chinese futures market. We can expect to linkage between Pakistani stock market with ASEAN stock markets, and we can expect our market linkage with the international markets as well, whereby the foreigners companies can come to Pakistan for issuance of their securities, as well as Pakistani companies go to the other counters to raise funds. For example, to even today, some companies floated their securities at Hong Kong Stock Exchange and London Stock Exchange through GDRs. So these global platforms can be linked to provide investors and companies with multiple options. For primary market development, of course, the area we need to focus on is SME board. It is being estimated that it has been estimated that we have around 1.5 million small businesses in Pakistan that needs funding. And if capital market can be able to provide them with a platform where they can raise funds directly from the providers of fund, I think that will be very beneficial for the SMEs operating in Pakistan as a business as a whole and economy as a whole. So we are aggressively working on this. We have tried multiple times and with different options to develop this board. Theoretically, regulatory framework is there, the board is there, but unfortunately we are unable to get any listing on this board till date. But we are still working on this, and Pakistan Stock Exchange and other stakeholders are trying their best to make this board more viable for the small and medium enterprises to get and raise capital market at Pakistani Stock Exchange. Finally, let me just complete because this is last slide and we can just get to the question and answer sessions in the remaining time we have. Development of debt market, we are planning to develop a bond pricing agency that can price particularly privately placed securities. We are going to provide the necessary framework for infrastructure bonds, sustainable financing options, for example, green bonds, etc. Sharia compliant bonds like Sukuk securities, both listed and private placed. And we are also pursuing the government to raise sovereign debt from capital markets so as to provide an ordinary investor with an opportunity to invest in government securities. Presently, the government funding, government borrowing is normally dependent on banking institutions. We want them to, like in other developed jurisdictions, to raise debt through capital market so as to make this capital market more vibrant, more options for investors as well. So with this, I conclude my discussion and presentation with a quote, and you can perhaps read this. This is the saying of Hazrat Ali Radhiyallahu Ta'ala anhu, the more you know that you don't know. Basically, when we make aware ourselves with the new knowledge, then we enable ourselves to know that we need more knowledge. जब आप जानते हैं तब आप जानते हैं कि आप कुछ नहीं जानते. So therefore this session is a beginning whereby we try to enable you to get knowledge. We didn't try to teach you something or make you aware of things, but we try to make you aware to get knowledge on these areas and to connect with us through our portal jamapunji.pk and Jamapunji Facebook and get more knowledge in a timely and in a friendly manner. So with this, I thank you all participants sitting here and joining us through webinar facility. And now we are open to questions.
Thank you very much, Tariq Saab. It was a very informative session. Now we start with the question answer session. There are a few questions that were asked online previously as well. So if you would like to start with them or whatever is convenient, we can start.
If you can just show the question.
So this is a question: how is KMI 30 and KSC 30 index created? What are liquidity options available in case a person is not able to settle on due date?
So let's just go by one. The index, is a representative of certain securities. There is a criteria that is predominantly market capitalization based that is used to filter such companies, enable to qualify them in a particular index. For example, KSE 30 index is representing top 30 companies with most market capitalization, the most liquid companies. Similarly, KMI 30 index is Islamic securities, Sharia compliant securities, or shares that are qualified and also are more liquid. The criteria you can find on PSX website. Index criteria is a detailed document that prescribe the rules and procedures, and it also includes numerical examples how a security is included and weighted. Its weight is computed in an index. Because when an index is moved, the underlying whole basket of security also moves in a particular direction. So you need to understand the weight of each security in that index, and you will find that information on PSX website easily. The liquidity option, if you are unable to settle a trade, are from two perspectives. First of all, if you purchase the security and you are unable to fund that security on the settlement date, what will happen? On the settlement date, you need to go for funding, and funding can be arranged with. Let me correct myself here. Even on the trade date, you need to specify that you are going to in a trade that you need to money from outer sources to settle such trade. So you are option available to go through margin financing system, margin trading system, and upcoming share Muraba system. These systems will enable you to borrow money for purchase of those securities. But if you are unable to go for such systems, that trade will be treated as a default trade, and default proceedings will be initiated, and that purchase will be liquidated in market through NCCPL system. For a sale trade where you are unable to deliver your securities, there is a mechanism available called securities lending and borrowing. Again, this system enable you to borrow securities to settle such trade. And if you are not able to borrow securities in a timely manner, NCCPL will liquidate that position into open market through borrowing securities and settling that trade. So if you are unable to settle trade in a timely manner, the default proceedings, the liquidation process will kick in, and as per regulations of National Clearing Company, that trade will be closed out.
Great. Another question by Ibrahim Yaqub. He is asking, you can directly do transactions through CDC. The option is there to avoid commission. Please elaborate this option.
Actually, this is not the case. I think directly dealing with CDC, you mean referring to direct settlement system we talked about. Even in direct settlement system, you need to trade through broker and pay a certain brokerage commission. The facility this system is providing is safekeeping of your securities away from broker. Unfortunately, this mechanism will cost you more, because you will need to pay broker as a brokerage commission and a custodian for custody of your securities. So it is probably for such investors, suitable for such investors that are investing in handsome amount in capital market. For small investors, it will be costly at the moment, and therefore we are working for another alternate option that can be made available, that is affordable for investors as well. And therefore we have included this in our future program as well, because currently for small investors it will be not a cost efficient solution. We are working on this to provide you with a cost efficient solution for retail investors as well.
We can take a live question first from here.
You mentioned about CPAC and raising debt for CPAC. If you could kindly elaborate it in terms of how we can do it and what practical aspects are there. And secondly, considering the FDI and all overall, when we talk about the borrowing to GDP ratio, how this mode is going to be very effective?
First of all, fundraising options are the same for CPAC project that are currently available to every company in Pakistan. But we are working on a new concept called infrastructure bonds that will be particularly for those projects. For example, if you need to develop you need to construct a dam, you can float term finance certificates, you can float sukuk. And for Neelam Jhelum project, government has already issued privately placed sukuk certificates, 2 sukuk certificates. Similarly, under the CPAC for infrastructure project as well as for other businesses, there will be an option to raise capital market through capital markets. Why? Because here in capital market, directly you can approach the potential providers of fund or investors. And as an issuer, as a business management perspective, you can reduce your intermediation cost, your borrowing cost. As we explained in the beginning of this session, that when you go to bank for taking loan, you normally need to pay 10 to 12% interest. But when you go for deposit to a bank, you only get 4 to 5% return. There is a huge intermediation cost involved in banking system. In capital markets, this intermediation cost is comparatively less because here providers of fund and users of fund directly approach each other. And therefore, there are chances that you will get cheaper finance through capital market issuance. There are chances, there are no guaranteed access. So therefore, CPEC related projects will be able to get huge funds from capital markets. And also you can witness from the recent IPO trends that each and every IPO is being oversubscribed. So you can notice that hefty liquidity is available in capital market. Here you can bring your products, your offering, your instruments, and you can raise capital funds.
Foreign currency as well?
At the moment, no. There are only Pakistani-dominated funding requirements.
We'll take 2 online questions. One is from Mohammad Zuhair Chaudhary. Will there be any change in document type for shares purchased from a listed company? So if you would like to.
If I get your questions, Ibrahim, correctly, Zuhair correctly, documentation, if you mean that you need to enter into certain kind of agreements before you can buy a shares, yes, you need to open an account with a broker. You need to open a custody account, and only then you will be able to get shares of listed companies. You will also like to note that shares are now in book entry or electronic form. So you need to have an electronic locker available with you to keep those securities. This locker can be called a sub account with a broker, it can be called an investor account with the CTC. So you need certain documentation, of course, to get the shares of listed company purchased from Pakistani capital market.
Another online question by Muzammil Kholia. Is it under process or consideration that all purchases will be settled on the spot instead of T+2 in the future?
There is a proposal approved by our Sharia Advisory Board in principle that is taking into account the Sharia aspect and suggesting settlement on T+0, spot settlement. So this product is going to be introduced in near future in stock market, where both systems T+2 and T+0 will be available to the investors, and it will be at the option of investor to choose anyone. Of course, the securities qualified Sharia screening will be available only for settlement on T+0 basis. Otherwise, T+2 is available for all the securities. So you will be able to settle a Sharia compliant securities either way at 2+2 and at T+0 basis.
Tell us about T+0 or T+2. What is this?
T+0 or T+2 is trade plus days required for settlement of that trade. T we refer to trade. If you purchase a security today, in the normal course of business, you need 2 days to pay for that purchase. For example, if we today is the 28th September and you purchase a security, you actually need to make full payment on 30th September, not today. And T+0 or T spot means you need to settle a payment obligation today.
Mr. Tariq, my name is Mubashir. I will first of all appreciation to you that very professionally presented all that what is concerned with the stock exchange in Pakistan and outlook for future. I want to ask this your comment on anti-money laundering and countering financing of terrorism regulation 2018. And recently the committee of PSX also moved that proposals to get its rule book changed. How do you see that is going to impact the market? Because as far as we guide the regulations and all that implement, the pressure is on the market and, how does it?
A very relevant and pertinent question. Unfortunately, we need to aggressively work on anti-money laundering regime due to FATF-like things. SECP, of course, is an important institution in overall AFM anti-money laundering regime in Pakistan, besides State Bank of Pakistan and other regulators and law enforcement agencies. In our market, we are fortunate to have already documented processes, and I don't think there are any substantial changes that we have made to regulations that will materially impact investors' ability to invest in our market. There are few dramatic changes, or you say clarificatory changes that were required. The actual requirement on our part is actually to ensure compliance of those requirements. And the more regulations, the more clarifications are actually enabling efficient compliance by the market intermediaries itself as a first line of defense. So these regulations will enable the participants operating in Pakistani capital market to ensure self-compliance. So actually, in my view, these regulations will be able to assist them to develop internal policies and procedures to comply with the AML regime and CFTC regime.
Another online question from Adamji Abu. SECP encourages investors to use CDC investor account for holding securities instead of CDC broker sub account. At the same time, CDC charges material fees on transfer from CDC investor to CDC broker sub account for executing any transaction. This needs to be looked at, and movement from investor to broker sub account and vice versa should be without any fee. I think it's more of a comment from Adamji. If you would like to.
So, Mr. Adamji, let me agree with you on your proposal. You are absolutely correct. The cost of investor account services is higher than a sub account, and unfortunately, despite our best efforts and even I would say support of CDC, we are unable to bring down to a level where it is affordable to all investors. But yes, I already told you we are working on another proposals whereby your accounts will be maintained by another custodian. Maybe down the road, banks will be opening sub accounts where you will have to pay a small fee, as banks have large infrastructure available throughout Pakistan. But this is an area where more work is required, and I agree with your comment and suggestion.
Any questions?
So what's the main reason there are very few numbers of investors? I can't actually remember the number of retail investors. If you remember that.
These are around 250,000.
250. If you compare that with banking system, there are a huge number of depositors. What are the main reasons?
Actually,
250 is nothing.
First of all, you need to see the big picture. State Bank of Pakistan is operating since 1956, I think, under the SECP, SBP Act 1956, with the primary law in place. And banking institutions are primary institutions to meet financial needs. Whereas SECP was established in 1999. Previously, it was a CLA, government authority to manage affairs of capital market. So capital market, in fact, started developing since 2003 onward. So as compared to banking institution, of course, it is not as mature as banking system in Pakistan is. Secondly, banking is serving many other needs of people. For example, they are providing transaction services, they are providing safe custody services for cash, and they are providing other services like import-export for trade facilitation. Capital market, on the other hand, is providing different kind of services. And with this huge undocumented economy and informal financial channel, there are serious challenges towards development of capital market in Pakistan. So I agree, and therefore I listed it is as a key challenge to us as a capital market regulator, as a capital market as a whole, that investors need to come to capital market. And my personal view is lack of awareness, lack of education, lack of confidence, the primary reasons for small number of
Don't you think the market campaign is also the main reason behind this?
Sorry?
Marketing campaign.
Maybe lack of education, awareness, market confidence.
There are few rules and regulations by SCP on the brokerage houses.
I would say yes. This is another area. Of course, investment in capital market is properly regulated and documented, whereas you can buy a plot with any money you have, whether it is a white or black. So in capital market, only such persons can participate that have disclosed or documented resources to invest in. So this might be another reason.
There are many artificial transactions in the stock market, like one big group like the Nishant Group or GS Group. One company is purchasing securities of other company, and the price is going up.
Let me frankly disagree with you on this, because there are some certain myths and there are certain facts. One company can buy shares of other company, there is no restriction. But if you say they, by doing so, they manipulated prices, there are complete mechanism available to restrict that. There are position limits. An investor cannot buy a certain portion, more than a certain portion of securities. For example, if you purchase more than 10% of listed security, you need to disclose under the Securities Act that you have acquired this much amount. And if you cross 25% limit, you need to follow takeover regulations as well, because you are going to hold a substantial portion of shares of a listed company. For a banking company, if you cross a limit of even 5%, you need prior approval of State Bank of Pakistan. So there are limits available, and I'm not denying that there are no manipulation instances in market. But for that matter, we have a dedicated market surveillance system that enable us to track down those manipulative exercises where persons used pump and dump techniques to artificially inflate prices. And you will find a number of orders in our website where we have caught these violators, and we penalize them. So this is an offense, manipulation, price manipulation, and rigging, price rigging. And we are there to ensure that these rules are compliant and the violators are dealt with according to the rules and regulations.
My second question. I think all companies are registered even with the SEC. Even the Takaful or Sharia compliance companies are registered with SEC. Is there any? I mean, in general public, there is very common thing that there is no difference between conventional or Islamic companies. Conventional or Islamic bank or the Takaful insurance and conventional insurance. Can we be very satisfied that Sharia-based companies are 100% within the limits of Sharia compliance?
Actually, your doubt is a general doubt, and I agree to that. And this was the reason that we have introduced a special section in the New Companies Act 2017. And this section requires every company and every security that is being claimed as a Sharia compliant to fulfill the requirements prescribed by the Securities and Exchange Commission of Pakistan. So now there are standardized requirements for each and every company, how much it can have earning from impermissible sources, how much it can have a debt that is not Sharia compliant, and what are the other conditions, what is the you can say general criteria for qualifying as a Sharia compliant company or a security. So previously this was done by individuals, and now it is being done through the main legislation being issued by the in fact issued by the Securities and Exchange Commission of Pakistan. So down the road, you will see that public confidence in this segment will enhance, where every Sharia compliant company will be scrutinized, will be judged against the criteria provided in the regulation by the Commission, and we have a third party assurance that these are actually Sharia compliant.
If I take home finance facility from Islamic bank or conventional bank, both banks will charge
There's
cyber plus
a long
one,
debate
cyber
about
plus
it.
three, etc.
We can discuss this on another side, because first of all, banking is not our subject. We are capital market regulator, and we don't indulge in discussions with the banking instruments. But in my personal or professional view, there are serious differences. Fortunately, I was a PhD scholar in Islamic banking and finance. I'm doing my PhD. So I know by fact that there are reliable differences, and as a professional in my personal capacity, I do believe that Islamic banking is providing genuine financial options to Muslims to meet their financial needs in Sharia compliant.
We'll take a couple of questions online. From Fahad Jamal, currently separate online accounts need to be created to access various services such as trading account, CDC account, NCCPL, e-dividend account, etc. Will a one-window solution be made in future to facilitate investors?
Yes, of course. You are absolutely right, Fahad. There are multiple layers of account, and even there are multiple forms to be filled when opening an account. This needs to be this required to be a one-window solution, and we are working on this to provide such solution in future.
Mohammed Irfan Awan asks, regulatory overburden has caused a slowdown of brokerage business. Are there any initiatives for a simplified regulatory regime?
Irfan, your observation and question is also correct. I tend to agree with you. There are many regulatory requirements that are hampering brokerage industry growth, and this is primarily non-categorization of brokers. Brokers are even if a listed broker or a small broker, there is no differentiation in regulations for compliance. This area needs further consideration. As I at the beginning, I explained that we are working on the proposal where we can introduce such a framework where different kind of brokers are subject to different kind of regulations. So maybe these concerns can be addressed at that stage.
Irfan Chughtai asks, why do brokers deduct funds on the same day, that is T+0?
Because they are responsible for your settlement. Because if you don't appear on T2, they have to settle your trade. Therefore, they need to deduct at T+0. But they not always deduct funds on T+0. In certain cases, for example, if you have ample security, they can provide you with an option to pay your funds on T+ settlement. But it is a broker's choice. You can choose a broker rate where it can provide you with an option to pay your funds on T+2. And you can find a broker that will insist on paying your fund on T+0. Basically, it is a choice of investor and a broker, and therefore there are different practices in market.
Any questions from your end? We'll just take the last couple of questions. Sure. So Mohammed Zahir Chaudhary once again has a question. At present, what about the shareholders who now hold documents form of shares? How can they respond to the situation to update their share status on stock exchange after the stock exchange merger?
If I understood correctly, Zohair, you means if you have a paper form shares, physical shares, what will you need to do with those shares? First of all, you need to dematerialize those shares by converting them into book entry securities. And for that matters, you need to go to any broker or CDC directly and hand them over the shares and fill in certain forms to convert them into book entry form. Once these are converted into book entry forms, you can sell those shares in market whenever you want.
Actually, my question is ready.
Sure.
Actually, I'm also working with PSX. So my question is that related to same that question. If you send your physical shares, transfer date for verification, it will take around 2 to 4 to 6 months to verify.
If this is the case, this is a violation of the law, and you need to report this because under the law, the company is obliged to transfer and entertain your transfer request within a period of 7 to 14 days. And if this is not the case, you need to report that matter.
They are investors' concerns. They frequently came to us and
If you have such concerns, you need to report that this is a matter of non-compliance and this needs to be taken up. You can directly report to SCCP and we will take up this matter with the concerned share registrar. So 4 to 6 months are absolutely unacceptable.
especially THK associates.
It's unacceptable whoever the person is, but if you have a matter on hand, you should refer to SCCP.
Mohammed Fahim Islam, I think this is the last question. How SCCP will ensure compliance by foreign companies listed on SCCP?
Fortunately, the current regulatory framework requires all the foreign companies to incorporate an office in Pakistan. So presently, there are no foreign companies that don't have presence in Pakistan listed on stock exchange. Secondly, the rules and regulations are same for all the companies listed on stock exchange, regardless they are foreigners or local company. Thirdly, their funding in and out is being regulated by State Bank of Pakistan through special accounts. That accounts are termed as SACRA, special rupee convertible accounts, and their inflow and outflow is being regulated through those channels. We have a liberal foreign investment policy whereby any foreigners can repatriate its profit and capital whenever it wants. So there are no restrictions, and therefore foreigners can take away their profits from Pakistan anytime they want.
Okay, we have another question. I want to ask that can I register private limited company in Pakistan online now in 4 hours?
Yes, you can register. Yes, you can register. I'm not sure where you're from, but if you are from major cities, you can easily do that, and you will find complete promoter's guide available on our website. You can also find our toll-free number where our dedicated staff will assist you and help you to complete these processes.
Any further questions?
I just want to add one thing you must tell to your attendees that if they are investors, if you have some rights, then you also have some responsibilities. For example, if you are going to open an account with a broker and you are not correctly filled your information or leave something blank, the CDC will not get information about you. What's your email address? What's your contact number? So there will be chance of fraud there.
Absolutely, buyer be aware concept should be there, and we need to emphasize. You rightly pointed out that each and every investor is required to take due caution and due care while investing. And there are many ways to get this information that what you are supposed to do. There are investor guides available. There are guiding posters available. You can find such information on SCCP website, stock exchange website, on the website of Jama Punji portal, on the Facebook page of Jama Punji, and on multiple other locations. You need to first of all know what you need to know, and when will you know that I need to get this kind of information, then get that information. This is the only way you can protect your investments.
Great. So thank you very much once again, Tariq Naseem Saab, for conducting such an extensive and informative webinar session on where we see Pakistan Stock Exchange in the next 5 years. We would also like to thank all the attendees, all the members who have attended this session online or at the Islamabad office as well for their attendance, and we look forward to conducting several other sessions with the SCCP in the future. Thank you very much.
Thank
Thanks
you.
a lot.
Thank you very much.
Thank you.
August.